Well, exactly. I mean, I've been worried about this since I started visiting property projects 15 years ago in these trips. I mean, there was way too much construction. And the current data on pricing shows it around flat. But anecdotally, people who've come back from trips into China are seeing declines of anywhere from 25 to 50% in prices. So it's a disaster. The government engineered this on purpose because they were concerned that there was a bubble, which of course there is. So this is not a surprise that this is going to happen in this way it's turning out. Now, the issue is the sell side keeps pushing this idea of a stimulus or some sort of magic bullet. There is no magic bullet. The government is looking for a free lunch. The Central Committee of the Politburo just issued a proclamation saying that they would encourage the private sector. But that basically means that they refuse to defund the state sector and the security apparatus. So unless the fundamental reforms that are required to really goose the economy are just not happening.
So I don't know whether S&P and Moody's really have much access these days, and so whether the quality of their analysis is particularly reliable at the moment. But I guess you're thinking that their call on Dalian Wanda is probably on the right side anyway.
Oh, I'm sure it's on the right side. In fact, they're actually pretty good because they've got a lot of bond investors they've got to pay attention to. But they're probably overly cautious because they don't have the full story. But yeah, Dalian Wanda is probably in trouble. Now, the government is purposely leveraging the property market, as I said, and they also don't like the idea of having these huge companies with a lot of wealth, because that could be a potential threat to the party itself, as we saw with the tech sector 2 years ago. So there's lots of things going on. But I think there's a lot more blood on the streets in the property market among smaller developers across China than necessarily just the big ones.
This has devolved into a little bit of doom and gloom. And even if it is rightly so, because I want to get back to what you mentioned, that there's almost nothing they can do on the stimulus front that would actually be something substantive. But could you see the possibility of them, if they went the consumption voucher route, and, this might seem like I'm being a little bit trivial, but they could just pay for everyone's weddings if you want to, stimulate family formation, because that's been a big problem. Provide subsidies for people getting married, perhaps that will then juice the property market. But is there any kind of possibility that they go a little bit outside of their usual realm of pump priming and going after infra and property in order to fix some of the issues that you're talking about?
Well, I'll give you an example. I just looked at the share of household loans over the past 18 months. While the government is talking about supporting consumption, the share of household loans has dropped by 2.6% out of total loans, which is, quite a large number. And that is partly demand-led because people don't want to borrow, but it's also because the government doesn't want to defend the state sector. Now, the real issue is how the provinces are going to handle defaults of the property sector in their each individual provinces. That is a major reform to the system. And we don't really know how that's happening because it's a sort of a battle by state battle, a province by province battle. But if the provinces are running out of money, how can the central government then just have the extra tax revenue to hand out huge subsidies to the consumption side? They just don't have that kind of cash.